to life in different parts of Georgia coming together for this House bill, and the effects that it's going to have on all of us are pretty significant. So the more we can understand and the more we can know what resources are available out there, the better off we are. We're going to be recording this, so we will have that going. My friend and colleague Dana McKighton has organized this and did a yeoman's work over the last couple of weeks putting together what is basically a last-minute webinar. But she handled it like the champ that she is, and she's going to be recording that for us. So we will get that recording link both posted to the DCA website as well as sent out to everyone who registered for the webinar and those who submitted supplementary questions once we hit our capacity. So many thanks to my colleague Dana, and just so you know, that link will be coming forward on the recording. So we have a rather diverse cross-section of folks on the call today. This was a webinar that was intended for local government finance officers, for chamber and CVB executives across the state, for accountants and auditors that handle all of the accounting and all of the reporting requirements that come along with these hotel-motel tax dollars. So we're going to cover a lot of different aspects of the hotel-motel tax, particularly as it relates to the short-term vacation rentals. I'll use the term Stvr occasionally throughout our discussion today, and that's those platforms, the Airbnb, VRBO, HomeAway, and other platforms that are now going to be collecting these local excise taxes. So today should give you a basic understanding, but there are a few things I would like everyone to keep in mind, regardless of where you are, regardless of what role you have. Now, House Bill 317 is going to be a large undertaking. It's going to be a lot of relationships between nearly 300 local governments, cities, counties, and consolidated governments alike. It's also going to be a lot of platforms, Airbnb, VRBO being the two most prominent examples that you've probably heard of. So there are going to be a lot of relationships that emerge in the coming weeks and months. So I would encourage you to be patient. Also know that DCA nor any other state agency, whether it be Department of Revenue, Department of Economic Development, or anyone else, is going to act on the local government's behalf. So a lot of the relationship building with the platforms is going to be on the onus of the city or county government that's the taxing authority when we talk about House Bill 317. But we do want to encourage that dialogue. So as we go through today's presentation, if you have any questions that don't get addressed, please put those in the chat box. And Dana, that friend and colleague of mine, is going to moderate that, and we'll address those toward the end of the presentation today. But a lot of the questions that you submitted in your registration and the supplementary questions that we offered up, we're going to address those in the context of today's conversations. So just a few basic reminders that everyone's probably used to at this point. If you have not already, please double check and make sure that your microphone is muted. As much as you may not want to hear me drone on, that's why we're all here today. So please, if you would, mute yourself.
Just muted.
Whoever that was, please make sure you're muted. And know that you've got a lot of resources throughout the state, not just us here at DCA, even though we don't act on your local government's behalf. But if you're in the CVB world, know that you've got Mark Walter and the GA CVB crowd that's there to back you up and provide support. Our colleagues and friends at the Explore Georgia team, the tourism division at the Department of Economic Development, led by their Deputy Commissioner, Mark Jaronski. Amy Oneacre at the Department of Revenue and her team are taking on part of this task as well. Same with Jackie Newbert, our friend and colleague from the Department of Audits and Accounts, and John Holsey and his team from the Carl Vinson Institute of Government. Also on the local government side, know that you've got GMA and ACCG and resources in your colleagues and partners in those organizations and other groups from across the state. So with that, we'll launch into a discussion of today's topic, and that's understanding the details and getting ready for House Bill 317 and what that means starting later on this week when that goes into effect on July 1st. So for those of you who don't know me, my name is Tyler Reinagel. I'm the Director of the Office of Planning and Research here at the Department of Community Affairs. And all things related to hotel-motel tax training, reporting, and complaints, those all get channeled through our office. So while we're not acting on your behalf and we don't have any direct hand in the collection or use of hotel-motel tax dollars, our goal is to best equip local governments, cities, counties, and consolidated governments, as well as chambers, CVBs, and other DMOs on how to most effectively, efficiently, and appropriately use these restricted dollars. Now, we take on a lot of roles in that process. We're a repository for information. When cities and counties change their ordinances or adopt new hotel-motel excise taxes, we're the repository for all of that information, including the enabling legislation that it may take. We also handle all of the annual reporting requirements and remind folks when they may be delinquent on those requirements. We ensure compliance with all of the spending and directives from state law. We convene the Hotel-Motel Tax Performance Review Board, or the PRB, which annually convenes to hear any bona fide complaints about potential misuse of hotel-motel tax dollars. And we also assist with logistics, helping folks get a better understanding of the restrictions that exist and how to most effectively and efficiently use those dollars, though with the caveat that DCA as a state agency does not provide legal counsel or legal guidance to your local government. That falls on your city or county attorney. Today, we're going to talk about a number of issues related to House Bill 317. The first thing we're going to do is somewhat of an introductory understanding of the trajectory of money. When we pay sales and use tax, where exactly does it go? How does it get where it's intended to be? We'll talk a little bit about some of the mechanism changes, how things are going to change once HB 317 becomes effective on Thursday of this week. We'll look at the restricted spending and what city, county, and DMO leadership need to know leading up to that. And we'll also look at anticipated growth. Obviously, this is a new arena where taxes by and large aren't being collected across the state, so there's going to be some change in the bottom line when we start looking at the finances. We'll start by looking at the trajectory of the money. Now, anytime we talk about hotel stays in the state of Georgia, there are three critical caveats to have here. And those are the distinctions between the sales and use tax. That would be what you pay if you go shopping at Home Depot or Target or any other retailer in the state. And that includes the 4% state sales tax and any lost, splost, e-lost, or other local option sales taxes that may exist in your city and county. The second on the bottom right that you see here is the $5 hotel-motel transportation fee. This came into existence about 6 years ago and is charged for transportation infrastructure statewide. Lastly, there's the local Hotel-Motel Excise Tax. This is the tax that we're talking about here today, ranging anywhere from 2 to 8%, depending on where you are in the state, what your city, county, or consolidated government has in place. Now, each of these three is going to appear on a bill if you stay at a hotel anywhere in the state of Georgia. And starting on Thursday of this week, it's going to appear if you stay at a short-term rental or an Stvr. But how exactly does that money get where it's supposed to go? Well, the sales and use tax, the lost, splost, e-lost, etc., that gets collected by the retailer. Whether you're eating at a restaurant or shopping at a store or staying at a hotel or short-term rental, the retailer is going to collect and remit that money to the Department of Revenue. The Department of Revenue at the state level will in turn distribute that out to the intended recipients, whether it be a city like Savannah, a county like Fannin County, consolidated government like Athens-Clarke, or a school district or GISFIC, which receives the T-SPLOST funding for some regional projects. The Department of Revenue acts as the clearinghouse of sorts for this function. Similarly, the Department of Revenue acts as the clearinghouse for that $5 transportation fee we talked about. The hotel, or as of Thursday, the short-term rental, collects and remits that $5 fee to the Department of Revenue, who then gets that to GISFIC for investment in infrastructure for transportation across the state. Now, that $5 fee, many of you in local government will be thrilled to hear, is not something that's going to fall on you. That's going to be collected by the retailer, in this case, the short-term rental platform, and remitted directly to DOR. In fact, that our friends at the Department of Revenue have already issued a policy bullet, and you see a screenshot here, and that's available on their website on what exactly House Bill 317 does to that $5 fee, the collections, and where and when and how it's supposed to be remitted. Now, what we're talking about here today is that local excise tax, which you can see here gets a little more complicated, largely because that is not a tax that involves the Department of Revenue at all. Each of your individual hotels or lodging establishments or short-term rentals is collecting and remitting the excise tax as it applies in a particular jurisdiction. So as an example, Fannin County down in the bottom right has a 5% excise tax as of today. So Airbnb, the Hampton Inn, the Marriott, whoever is collecting that lodging tax in Fannin County is responsible for collecting and remitting that 5% directly to Fannin County. Similarly, 6% in the city of Savannah and 7% in Athens-Clarke County. So as you can see, there are a lot more lines, a lot more relationships, and a lot more trajectories for the money. So when I talk about exercising patience, hopefully this visual gives you an idea of why exactly that's important. Now, 317 is going to fundamentally change the mechanisms by which these taxes are collected and remitted back to local governments. Now, if you were to book on, for example, VRBO prior to July 1st, this is the type of interface you would see. Now, this is just for illustrative purposes, but gives you an idea of what's being collected and what's not. So this is a screenshot from me trying to book a room for May 21st through 22nd of this year, prior to House Bill 317 going into effect. Now, you'll notice there's a line here at the bottom for occupancy taxes and fees. This is reflective of Chatham County's 7% sales and use tax. So the same thing you would pay if you went to a restaurant or a store to go shopping. Those sales and use taxes, which are remitted to the Department of Revenue, were being collected prior to July 1st. Now, House Bill 317 adjusts this so that now that booking on a short-term rental platform will also be subject to the $5 per night fee, as well as the local Hotel-Motel Excise Tax. Now, there are a number of places in the state that are already collecting the local Hotel-Motel Excise Tax. Based on reporting the DCA, you see the counties and consolidated governments doing that outlined in yellow on this map, and the cities that are doing that in blue. Now, you may be asking yourself, how exactly are these governments collecting the local excise tax when perhaps our city or county is not? Well, it's a little bit more complicated because the individual platforms, and you see examples of them here on the left, are returning their collections to the property owners, the individuals who own the houses or the rooms that are being rented out on these short-term platforms. In turn, the cities and counties that you saw on that map earlier are collecting the local excise taxes directly from the property owners. Oftentimes, there's a standardized form that exists, and property owners who are registered with the city or county are collecting and remitting those taxes back to City Hall or the county courthouse, depending on the jurisdiction, who are then using those funds in accordance with the restrictions that exist on hotel-motel tax collections. Now, as you saw from the map earlier, there aren't a whole lot of jurisdictions that have gone this route. The overwhelming majority of local governments in the state have a brick wall between the property owners and the city or county government. The property owners are getting the money that they collect from the individual platforms for renting out their homes or their rooms on the short-term rental platforms, but the city or county government isn't necessarily collecting from the property owners. There's a brick wall that exists. Well, House Bill 317 is going to fundamentally change that. Whether you are in this relationship where your city or county government is collecting from the property owners, or you're in a jurisdiction that has that brick wall where you're not getting the tax revenue at all of our local governments in Georgia are soon going to be going to the model you see here. The individual platforms will be collecting those local excise taxes, and they will be remitting them directly to the city or county government. This is going to bypass the property owners, and there won't be any function in which property owners are remitting these excise taxes to the city or county. Straight from the platform to the local government, and then the local government going out to the appropriate use based on your authorization paragraph and tax rate. Now, keep in mind that the $5 fee is totally separate from this. The platforms will begin collecting that, but the $5 fee, like the sales and use tax, gets remitted to the Department of Revenue. The local excise tax is coming directly to the local government from the platform. So regardless of which mechanism you have in place, there's going to be a change. If your city or county had been collecting directly from property owners, that's now going to cease, and the onus is going to shift to the platforms that you see on the left-hand side here as a few examples. If you haven't been collecting at all, you're going to start receiving revenue directly from those platforms, and you won't have to interact with property owners to get the tax money to which your city or county is entitled. Now, this is an example that we see published by the Georgia Department of Revenue, and this gives you an idea for illustrative purposes only of what exactly someone would see if they're booking a home or a room on Airbnb, VRBO, or any of those other short-term rental platforms. Up at the top, you see the basic charges that you would see: the rental charge for the house, a cleaning fee, service charge, processing fee, and whatever other fees may exist on there. In this instance, the local government has an 8%, the state and local sales tax, is 8%, and you see that calculated there as $278.40. That 8% state and local sales tax is getting remitted to the Department of Revenue and distributed out to the appropriate beneficiaries. On the bottom, you see the state hotel motel fee. That's a $35 charge, $5 for each night of the stay at this particular property, and much like the sales and use tax, is getting remitted back to the Department of Revenue for the appropriate transportation investment. What we're talking about is in the middle. This city in particular has a 7% hotel-motel excise tax in place, which means the collection for this stay is going to be $215.60, getting remitted directly from this platform, who's collecting it from the guest, and remitting that back to the city in this case, but also to a consolidated government or county government, depending on the jurisdiction in which the property exists. Now, a common theme of our discussion today is going to be that the collections from this, even though it's short-term rental rather than a traditional hotel, they are still subject to the same restrictions as other hotel-motel excise taxes. Now, like I said, this is going to be a long effort. There are going to be hiccups and everyone needs to exercise patience moving forward, but you should rest easy knowing that the platforms are starting to make moves in getting information out. This is a screenshot from an email that went to Airbnb property owners across Georgia in the last week or so, giving information on that July 1st, 2021 change, making sure that the property is tied to the appropriate jurisdiction, identifying the city or county where it exists, and conveying to the property owners how exactly the mechanics of these payments are going to work. So they're already doing proactive outreach on this front. In addition, the parent company of one of the other platforms has reached out to the Department of Community Affairs asking for contact information for local finance officials who have been responsible for submitting the annual hotel-motel excise tax reports. That information was provided to them, and while we can't speak on their behalf and can't act on the behalf of your city or county, they should be reaching out to you in the coming weeks if they haven't already. Now, keep in mind the timeline is going to be somewhat elongated. Collections on this don't begin until July 1st, which means you probably won't see the first remissions until late August, and by the time that gets turned around through city or county finance departments and out to the CVBs or DMOs that are getting portions of that restricted spending, it may be Labor Day. So don't rush this. Be patient, but be diligent in keeping an eye on everything that unfolds over the next couple of weeks and months. Now, the other thing, like I said, we wanted to talk about today was the idea of restricted spending. There's going to be an increase in revenue in the coming weeks and months for many of the communities that are on this call today. And you need to understand what restrictions exist on that newfound revenue to make sure that you remain compliant with state law and don't get in any trouble down the line. DCA is not an enforcement agency, but we want to help you stay ahead of any of these challenges or problems as best we can. So at its core, House Bill 317 changes the definition of the word innkeeper to include short-term rental platforms. That means that the tax that's being created under the section of state code related to the Hotel-Motel Excise Tax applies here as well. All of the restrictions that exist on collections you may get from a Motel 6, a Hampton Inn, a Hilton, a Marriott, or any other brand name traditional hotel, those same restrictions are going to apply in this instance. So whatever portion of your funding has to go to promotional activity by your DMO, the percentage will remain the same. Whatever percentage you may have for tourism product development will remain the same. And it's important to know what your authorization paragraph is, because that dictates the restrictions that exist. Now, we're going to look at two of the more common examples today of the authorization paragraphs and restricted spending, but there are a number of communities that you see outlined here that are on grandfathered or retired authorization paragraphs. You're not doing anything wrong, you're just under a paragraph that won't be applicable in today's conversation. So if you see your county or your consolidated government highlighted in gold here, or if you see your city with a blue dot here, we should have a different conversation because the restrictions that exist for your spending are slightly different than what we're going to talk about today. Now, the most common authorization paragraph and set of restrictions we have are under paragraph 51A3, as we refer to it. You see the full statutory reference here, but this is a 5% tax in the active authorization paragraph. If you're collecting a 5% tax under this paragraph, then 3 of the 5 pennies you're collecting, or 60% of the total revenue that's coming in from your hotel-motel excise tax, could be available for use in your general fund. It's unrestricted. It needs to be accounted for in an appropriate way, which we'll talk about shortly, but it's unrestricted funds. The remaining 40%, or 2 of the 5 pennies that are coming in, are restricted to the promotion of tourism, convention, and trade shows, or TCT spending. Now, this spending has to happen through an eligible destination marketing organization. Most commonly, this is going to be a chamber or a convention and visitors bureau, but it has to be a 501c6 nonprofit organization. This is not money that the city or county can spend directly. This cannot be done through a public entity like a downtown development authority or a joint development authority. It has to be done through those 501c6 nonprofit organizations. Now, the other widely used authorization paragraph we have in the state is paragraph 51B. Now, 51B is widely in use, as you see here by the same color scheme, across the state, in every corner of the state, and allows for additional spending for what's known as tourism product development. Now, if you happen to be under this 51B authorization paragraph and you're collecting an 8% tax, which is the maximum amount allowed in the state, this is how those funds break down. 3 of the 8 pennies, or 37.5% of the total revenue collected, is unrestricted. So much like we talked about in the previous paragraph, this could find its way to the general fund for unrestricted purposes in your city or county. 3.5 pennies, or 43.75% of total revenue, are restricted to the promotion of tourism, conventions, and trade shows, that TCT spending that has to be done through a 501c6 destination marketing organization. The last 1.5 pennies, or 18.75% of the total revenue, is available for what's known as tourism product development. Now, we've got other resources to go into details on what tourism product development is, but in short, it's brick and mortar projects, things like branded gateway or wayfinding signage, park and trail networks, performance arts centers or amphitheaters, and other things that will drive the tourist experience and the visitor experience in your community. Like I said, there are other resources to get into the details of that spending, but just know that if you're collecting under this authorization paragraph and rate, these restrictions will continue to apply. Now, one of the most common questions I know we've gotten in our office is, what exactly can we expect in terms of growth? And that's a very tough question, and the answer is really, we don't know. And I'll tell you a little bit more about that coming up. Now, local government finance officers, in anticipation for this change, should do a number of things. First, keep an eye out for those introductory communications from the Stvr platforms. Some of you may have received these already, and if not, you should be getting them in the coming weeks. We don't have an answer at DCA, nor does any state agency, but that is a relationship that you will have to build with the platform, and I know they're starting to reach out to some folks already, and if they haven't, they should be in the coming weeks and months. Second, keep in mind that remission of these hotel-motel excise tax dollars will come directly from the platforms, not from property owners. The collection is being done when a guest makes their reservation on the platform's website, not whenever the money gets to the property owners. So if you're in one of those communities that's already collecting the tax, but from property owners, that mechanism is going to change come July 1st. If you haven't been receiving it at all and those collections begin on July 1st, you'll be getting that directly from the platform. Third, from a taxation perspective, property owners renting through the platforms will have no engagement or interaction with the county, any city, or the state. And we'll talk a little bit about front-end regulation a little bit later on, but this is just from a taxation perspective. The tax collections are going to be from the platform, never from the property owner. Next, all collections from the short-term platform should be accounted for in the same way as collections from traditional hotels, your Marriotts, your Hiltons, your Holiday Inns. That is to say that they need to be received into Special Revenue Fund 275 from the Uniform Chart of Accounts. These should not go directly to the general fund or directly to any other fund, but rather be channeled through that special revenue fund because of the breakdown in spending restrictions that exist. Next, if your jurisdiction is already collecting the hotel-motel tax on short-term rentals, that is getting to payments directly from property owners, make sure to prevent any double taxation issues. Make sure that they're not paying the tax once to the platform and again from the property owner. Make sure that those double taxation issues are considered if you're having to make that transition. Next, adhere to the Uniform Chart of Accounts requirements and be cognizant of the restricted spending requirements. An increase of revenue is going to result in an increase in the amount of restricted dollars, and you need to plan accordingly for that. With that in mind, you if you're a city or county official, should keep in touch with your destination marketing organization. They're the ones that are required to spend these funds on promotional activities, and you need to have a plan with them, because ultimately the city or county or consolidated government will be the taxing authority and held responsible for those dollars, but the DMO is responsible for spending them on acceptable promotional activities. Now, I talked about the revenue projections and what you can expect in terms of changes, and this is a very tough question to answer. Now, a lot of people will reference the Fiscal Research Center's legislative fiscal note on House Bill 317, which looked at the growth in the $5 fee, which is a perfectly reasonable estimate and using viable resources to inform that number. The primary difference here, and the reason the local hotel-motel tax is not going to mirror the growth in that fee, is because the fee is a flat-based $5 fee per night, whereas the local excise tax is percentage-based and it's driven by the room cost. So while it may serve as a proxy, and we will see growth now that these short-term rentals are being taxed in a way they never have before on a statewide basis, we can expect the growth, but what that jurisdiction by jurisdiction growth is going to be is going to vary greatly from city to city and county to county. To give you an example just in how this plays out, we'll look at two examples. The first, being the loyal UGA grad that I am, is a Georgia game day example. If you were to rent this 5-bedroom house in 5 Points in Athens-Clarke County, it runs $1,400 a night. Now, for illustrative purposes, the numbers you see here, based on the 7% tax that Athens-Clarke County has today, the $5 fee is only going to yield $10, but the Hotel-Motel Excise Tax garnered by Athens-Clarke County is going to be nearly $212. So the growth that you see in the state fee obviously is radically different from what you see here in terms of Athens-Clarke County's excise tax collections. Again, strictly hypothetical and for illustrative purposes only here. We take Athens on game day and juxtapose that with a weeknight in Folkston, Georgia, down in Charlton County, and you see a big difference. The same two nights is going to yield $5 from the state transportation fee. And based on the city of Folkston's 5% hotel-motel tax, the collections are going to be $13.75. So these are just two extreme examples for illustrative purposes, but it should give you an idea as to why the fiscal note on the $5 fee can't really be taken as a mirror image of what's going to happen for city or county governments across the state. Now, beyond local finance officials, we also have a lot of DMO, or Destination Marketing Organization leaders, on the call today. And DMO leaders need to make preparations of their own. Now, we know they're going to be increase in most jurisdictions across the state because most cities and counties aren't collecting from the property owners those hotel-motel taxes that are owed. Now, in the 24 or so jurisdictions that already have this, the revenue increases are going to be minimal. But for those who are going to be taxing these for the first time, you're probably going to see some significant increases, particularly as we get into the fall and winter months coming up. Now, with that in mind, you want to make plans for how you're going to use this money. Don't spend it yet because it's not in pocket, and we don't have a very clearly jurisdiction-specific idea of how much money we're talking, but start to make plans. Start to come up with ideas and new projects that you might be able to use to promote your community moving forward. Keep in mind that the restricted spending is always going to be percentage-based and that you need to be a qualifying organization making the appropriate use of funds in the same fiscal year in which they're collected. Those are all requirements in state law. You have to be that 501c6 nonprofit, you have to use it for promotional activities, and you have to spend it in the fiscal year in which it was collected. So start thinking ahead, start getting some ideas, and start having conversations with your local government leaders, your mayor and council members or city manager, county commission chair and commissioners, or the county manager. Start to think about how you might be able to use this money in an agreeable way to promote the community in the most effective way possible. We also have a number of accountants and auditors on the call today, and you're going to play an important role in this as well. Like I said, the newfound revenue is going to be subject to the same restrictions and collected under the same auspices as the Hotel-Motel Excise Tax that's been collected for decades. With that in mind, all of the revenue from the short-term rental platforms should be received into that Special Revenue Fund 275 from the Uniform Chart of Accounts. Any of the revenue being expended in other funds, for instance, the unrestricted portion that may be moved to the general fund in your city or county, should have a documented inter-fund transfer. Those collections, even though a percentage of them is unrestricted, should not be going directly into the general fund. Because it's all percentage based, the entirety of these collections needs to first be received in Special Revenue Fund 275, then with a documented interfund transfer going to the general fund or other fund where it may be expended from for appropriate purposes. And lastly, keep in mind that restrictions that exist on current hotel-motel tax collections, namely promotional spending done by an eligible DMO or brick and mortar projects in the tourism product development arena, will be applicable on the newfound revenue on a percentage basis. So when that money comes in, this graphic should give you an idea from an auditing perspective of where it's going to go. Always coming in first to Special Revenue Fund 275 and then going out to the destination or the target of that, whether it be unrestricted money to the general fund, restricted TCT dollars to your chamber or CVB, or from Special Revenue Fund to those brick and mortar tourism product development projects that you see here. Again, you'll always want to refer to your jurisdiction specific authorization paragraph. Just because the city or county next to you is collecting at the same rate doesn't mean they're necessarily doing it under the same authorization paragraph. So you need to know about you and not do an apples to apples comparison necessarily with someone in the next county or the next city over. So to give you an idea of what we're talking about in terms of growth. Now, like I said, we don't have jurisdiction specific estimates, and those would be very difficult to come up with, but this kind of gives you an idea of what 15% growth in these numbers may look like. So if you have a 5% tax in place in your community, 15% growth could result in an extra $1,800 to your DMO. If you're bringing in $250,000 a year, it could result in $15,000 going to your DMO for promotional activities. And if your community pulls in $1 million a year, you're looking at an extra $60,000 going from $400,000 to $460,000 to your DMO for promotional activities. Now, I focus on those DMO numbers because it's important to remember that that money has to be spent in the fiscal year in which it's collected. I repeat that just to drive home the point that you need to have a plan. You need to think about how you're going to use this money for a new promotional effort or new materials or new activities to promote your community. If your community has an 8% tax with the TPD spending available, you're also going to be looking at some newfound revenue. You see the growth there, whether you're at $30,000 a year in the top, $250,000, $250,000 in the middle there, or $1 million on the bottom, where you could see growth upwards of $50,000 in that TPD spending. Make a plan. Have an idea for what you're going to do. Now, keep in mind, you don't want to spend it before you have it. We never want to do that. But be thinking ahead about what you might do and how you might use that money. Now, one of the biggest questions we always get, regardless of whether we're working with local finance officials, working with DMOs, or any other organizations, is what about our $250,000 contract with our chamber? Well, the only thing I can do is stress that restricted spending is always percentage-based, never dollar-based. So any contracts or MOUs between DMOs and local governments should always address percentage of total collections, never a flat dollar amount. State law stipulates very clearly that these restricted distributions are based on percentage, not a fixed dollar value. So if your contract or your MOU talks about a flat dollar amount, tap the brakes, back up, and have that discussion looking at state code and your authorization paragraph. Now, if you have that fixed dollar amount, get your lawyers together, get your leadership together, and have that discussion to hammer out a percentage-based distribution. State law requires it, and those numbers have the potential to change in a very dramatic way based on collections that are about to start from the short-term vacation rentals. You want to make sure to stay ahead of that problem, because if a complaint gets filed, you're going to have to go through a rather arduous process, and for many of you in far corners of the state, you would have to come to Atlanta for a hearing, and I know coming to Atlanta is no one's idea of a good time. Now, moving on, one of the other questions we get is about front-end regulations. What exactly does this do to our city or county's ability to regulate short-term rentals? And the short answer is nothing. And what you see here is an example of the Code of Ordinances from the city of Savannah. Now, the city of Savannah for many years now has regulated short-term rentals, requiring registration and annual licensing. There's a GIS compatible map so that anyone can identify where registered short-term rentals exist, and complaint forms for neighbors that may have noise or parking issues that they want to bring to the city's attention. Regulations like this that require registration, licensing, or other requirements are completely unaffected by House Bill 317. Like I said before, House Bill 317 changes the definition of innkeeper for taxation purposes. This does not limit what a city or county or consolidated government can do in terms of limiting the number of short-term rentals or requiring registration, HOA or neighbor notification or insurance requirements or anything else. The front-end regulations continue to be the game of the local government, whether it be city, county, or consolidated government, and should involve your city or county attorney as well as local leadership. So those front-end regulations are unaffected by House Bill 317. It only affects the back-end taxation of that, which is now going to be collected and remitted by the platforms. And here you see an example of that short-term rental application that the city of Savannah has available on their website for a property owner that may want to apply for a new certificate. Now, I've stressed it before, and it can't be stressed enough in this situation. There's going to be an increase, so you need to communicate now between your local government and your DMO to make a plan for this incoming money. Make sure that you address any potential challenge or impasses now rather than later. And in doing that, keeping in mind that restricted spending is always percentage-based and never dollar amount-based, keep in mind that the Tct funds are required to be expended on an eligible purpose in the same fiscal year in which they're collected. This money can't be going into a rainy day fund. This money can't be going to some other purpose. It's got to go to the DMO, and it's got to be spent in the fiscal year in which it was collected. Also keep in mind that anything above 3%, regardless of your authorization paragraph, anything above 3% is going to be restricted on a percentage basis. So get rid of dollar value language in your contracts. Now, the contracting of the Tct funds can get particularly tricky, and this is an example of where that comes into play. Now, there's one line in state code that requires anything higher than the bare minimum restricted amount become the new floor for restricted spending moving forward. So, for instance, in the fictional city of Alpha, Georgia, if they collected a 5% tax under paragraph 51A3, the DMO, the chamber for the city of Alpha, should be receiving 40% of total collections. Now, if the city of Alpha collected $100,000 in fiscal year 22 and decided that they wanted to give $50,000 of that to the DMO for promotional activities, that's 50% of total collections, 50,000 of 100,000. So the new floor, the new minimum for the city of Alpha moving forward is 50% of total collections, regardless of the dollar amount. So you'll see fluctuations from year to year, but you want to be cognizant of the fact that it's the percent of those total collections, not a dollar amount, that defines what goes from the city or county to the DMO. So if you're a city or county, you want to be very conscious of the fact that you don't move that bar too high, and having a dollar amount in your contract sets yourself up for that. On the other side of the coin, it also sets you up for the potential where you may not give the requisite amount. If 50,000 doesn't meet the 40% threshold in a particular year, then you've fallen short and you're out of compliance with state law. And like I said, you don't want to come to DCA for a hearing. If complaints are filed, our office is responsible for conducting the preliminary investigations, and it's going to involve a lot of actors. Your DMO is going to be involved. There are likely going to be complainants who actually filed the complaint that get involved. You'll need your city or county attorney, among others, to be involved, and coming to Atlanta for that hearing is not something we want to encourage. We're friendly and we're happy to come wherever, whenever. We would rather you not come to us in this context, though. So anything we can do to help you stay ahead of that potential complaint and hearing, we want to do it. We are not an auditing or an enforcement agency. We're not out to get you, and we're not going to rule with an iron fist, but we want to help you, whether you be a local government or a DMO, stay ahead of any potential problems and avoid those as best we can. Another thing to keep in mind is that these restricted funds need to be reported in the same way that you've traditionally reported hotel-motel excise tax dollars. What you see here are screenshots of the project contractor information schedules for both the promotional spending and the brick and mortar tourism product development spending. Now, these are forms that would typically be completed by your DMO or other chamber CVB 501c6 nonprofit organization and submitted as a part of your annual Hotel-Motel Excise Tax report to DCA. Hopefully, if you're a DMO official, chamber, CVB, or otherwise, you've seen these forms and you're familiar with them, because this is how you report to DCA how those restricted dollars are being used in your community, making sure that you stay on the up and up in terms of those state law requirements on those. Now, one of the things we've encouraged across the state and with a variety of organizations is to establish a contract or MOU, some sort of written understanding ahead of the fiscal year that outlines expectations from both the local government perspective and from the DMO perspective, your chamber or your CVB. And a great example of that has been here close to home for me anyway, in the city of Hateville with the ATL Airport District CVB. Now, the city being near the airport has a lot of hotel-motel tax dollars coming in, and the ATL Airport District CVB is a CVB that works with 4 different local governments in the southern end of Fulton County. And they entered into this agreement, and one of the best things that they do here is outline exactly what the expectations are from the city as the taxing authority and the ATL Airport District as the organization receiving restricted funds and promoting activities. Now, this is just a snippet from their contract, and we're grateful for both the city of Hateville and the ATL Airport District letting us share this. But you see here, it identifies a number of events: the Happy Days Weekend, the Southern Film Festival Series, Coffee and Chrome, and the Chalk Art Festival, among others. So if prior to the fiscal year, your DMO leadership and your local government leadership can sit down and have this conversation and iron out these expectations, you'll avoid a lot of headache in the event of a conflict later on down the line. This is going to be particularly prudent in the coming year, as that newfound revenue for most jurisdictions across the state is going to have these restrictions. So I'll stress once again, start thinking of ideas, start getting plans in your mind for how exactly you're going to move forward in promoting your community and marketing your city, your county, and whatever events or sites you may have. Don't write the check yet, but have that plan in the back of your mind. So with that, I will open it up for questions. I saw the chat box blowing up, but I was intentionally avoiding it so as not to get distracted. So Dana, I will turn to you if you have any questions that came up that you'd like to pose, and we can talk about those in the last 15 minutes or so that we've got together today.
Yes, I do have some questions. I've gone through and saved the ones from earlier. So as questions come in, I'm going to get through the ones that have already come in, and then I'll get to the newer ones. So our first question comes from Robert Logan. He says, how does a local municipal government verify that the hotel-motel taxes are being remitted to the proper entity? i.e., HMT could be submitted to the county or the wrong city based on zip code information.
Absolutely. And, you know, like I said earlier, DCA, since we don't have a hands-on role in this process, we just do the training, we don't have any active hand in that process. So that's going to be one where you as the city or county government are going to need to reach out to the platform to find out what kind of information or what kind of materials they can provide to confirm that. Obviously, there are a lot of things that could go awry there. If you've got a mailing address that's in Marietta, but you're actually in unincorporated Cobb County, obviously there's a difference there. And I can't speak to what exactly the platforms will do to address that, but it's something that you as a local government will be in the driver's seat, so to speak, in determining moving forward.
All righty. Next question is from Jennifer McCreary. Do TPD amounts have to be spent in the same fiscal year received?
That is a great question, Jennifer. The answer is yes, but it gets a little bit more complicated because if your community does have TPD funds available, in some instances, those may be able to be used for debt service on an eligible project. I would encourage reaching out. That, you know, is separate from House Bill 317 in the context of what we're discussing today. But I'm happy to have that conversation with you further outside of the context of this webinar.
All right, next up is Tommy Harrell. He asked, do you have a model ordinance that could be shared?
Funny you asked that, Tommy. It's as if you were a plant on our call here. We actually have a model ordinance On the DCA website, if you go to local government assistance on the DCA website, you will see our Office of Research tab on there. And in that Hotel-Motel Excise Tax section, we have got a model ordinance as well as a model resolution and local legislation if your community has interest in moving to the 6, 7, or 8% tax under paragraph 51B that we were talking about. That would open up the tourism product development funds for you.
All right, next up is from Eric Johnson. Do the taxes apply to private room or shared room rentals in Airbnb the same as they will to entire place rentals?
That is a great question, and one you'll probably want to consult with your city or county attorney on. Ultimately, the local excise tax is a city or county function. In areas of legal questions and legal interpretations, that is outside the purview of DCA and really any state agency. That is a local ordinance that is in place, and enforcement of that and interpretation of that, more prudent to your question there, is going to fall back to the city or county attorney. So I would engage with the city or county attorney in an active and ongoing way in the coming months. Because like I said from the outset, there, with so many relationships and so many communities and platforms across the state, there are going to be hiccups. There's no question about that. So encourage patience, but have open dialogue with the city or county attorney, because there's a potential they could play a very important role in that conversation moving forward.
All right, next our question comes from Laura Luker. Has DCA had conversations with third-party research companies such as AirDNA?
Good question, Laura. We have not. That is outside the realm of DCA's role here. Like I said, we don't have a hands-on role in the enforcement and the collection and the remission of these taxes. That is a function between local governments and the taxing entities, whether it be a hotel, a short-term rental platform, or whatever. Like I said, DCA nor any other state agency has an active role in that. So we do not have conversations and will not have conversations with any of those research companies or any third-party entity.
All right, next up is from Maria Spears. Does anyone know what the platforms will be including with payments? I am assuming the addresses, but does anyone know the details?
I will admit straightforward, I do not know. Kind of similar to Laura's question from before, since DCA and the state don't have a hands-on role in those tax collections, that's not something we're ever going to see, not something that is going to be sent to us or that we would ask for. So that is a conversation that needs to happen at the local level. And whenever the platform tax compliance offices reach out to you, whether by mail, phone, email, or however that conversation happens, that would be a question between the local officials and the platform.
Alrighty, from Chris Caldwell, do you have any advice on how to make sure all rented properties through Stvr platforms are paying?
No advice from our end. I will say, at this point, the platforms, as you saw on the screenshot there from, I believe it was Airbnb, sending the message out to their property owners that use the platform for rentals. They're being proactive about it. They're aware of it. The cost of non-compliance is going to be pretty high in that situation. But you definitely want to go to whatever lengths you believe are appropriate and necessary to follow up with them, follow up with their compliance offices to get whatever kind of information you can and make sure that that's happening. Again, DCA not being in the enforcement business, it's outside of our purview, but we want to make sure that you're as equipped as possible and aware of kind of what's coming and what the trajectory of this money looks like.
So a bit of a follow-up question right after that from Chris, okay. Which you may have touched on a second within your last answer, but I'll go ahead and read it out. He asked about if DCA has a list of contact information for the Stvr platforms doing business in Georgia. If so, if they can reach out if they don't reach out to them.
Unfortunately, we do not. Like I said, we provided one of those corporate parents with the contact information, phone number, and email address for the local government officials who completed the most recent Hotel-Motel Excise Tax report. So for some communities, that was FY 2019. For some, it's been FY 2020. So whatever name and email address were attached to that was what we provided them. In that same spirit, I really don't have any idea what their timeline is for reaching out. Like I said, collections don't actually even begin until July 1st. So there's still going to be a little bit of a turnaround here. So I would exercise patience. They're going to start collecting July 1st. You saw that in the screenshot from the Airbnb communication. So exercise patience. Like I said, the cost of non-compliance for them is going to be much higher than the cost of compliance. It may just take some time and some ironing out of those details. So while we don't have that contact information, we have provided statewide information to them. But great question, Chris.
All right, Robert Edwards asks about the slides, the actual slides being available for download. So I'm assuming that when we send out the link to the recording, we can send out a link to the slides, if I can be so bold.
I will trust my handy communications colleague to get an answer to that one.
So yes, Robert, we can make that happen for you. All right, from Beth Keller, again, this may go back to the question from Chris Caldwell, but just to not leave anybody out, are the Stvcs registered in Georgia?
I am not sure what the acronym Stvc means. I assume short-term vacation something.
I think Stvr is maybe what was meant, but I shouldn't. I'm reading verbatim just in case, because I'm not the program matter expert.
I completely get it, and there are no shortage of acronyms to be had in government work. That one, Beth, a good question is, again, outside of my wheelhouse. That is not something that they do with DCA. They may have to register as a corporation on some other front with some other entity, but that is outside of the wheelhouse of DCA.
All right, from Unita Smith Sellers, do you have direct numbers to the platform?
Yeah, same as before. We do not have contact information to provide for them. We provided it, and the onus is now on their corporate tax compliance or comparable office to do that outreach.
Alrighty. Rosanna Jenkins, my apologies if I mispronounced your name. What if an individual is renting their home out as the property owner and not going through a platform?
That's another one, a good question from Rosanna there. You want to reach out to your city or county attorney, because these are all local ordinances, and how things are handled in your city or county are based on your city or county ordinances. The attorney is going to need to be a part of that conversation. If it's not through the platform, there may be some other mechanism that you need to review, but that's going to be very much a legal question where the city or county attorney needs to be party to it.
All right, from Linda Cook, will the platforms let us know exactly who the taxes are from, i.e. which homeowners and how much for each?
Yeah, kind of that similar theme, Linda. Good question, and one that we just can't answer since we're not involved in that process. That'll be a relationship between local government and platform. So getting that information from them will be on the backs of the city and county officials who are involved, not something that the state has access to or would be involved in.
All right, Maria Spears asks, what platforms are other counties using to collect and manage Str?
That is a good question that was clearly not directed toward us, since we're not managing or collecting. Maria, I would encourage you in that instance, reach out to your regional services or your member services contact at ACCG. It appears you're in a county government, I guess. I know they're working hard to help their county membership out as best they can. So if you reach out to your contact at ACCG, and I'm not sure if anybody from ACCG is on the line, but if you'd like to chime in and tell Maria where she can reach out to, please do.
Janie Brooks asks, will the platform submit an itemized or detailed listing of payments? Which I believe goes back to the similar question.
Yeah, same question there. That one's going to have to be between the local government and the platform.
Okay. This may be a similar answer. Can city, county collect directly from property owners who do not use an STVR platform, but simply rent directly?
Good question. One that you'll want to definitely consult with your city or county attorney on enforcement questions there. What your ordinance permits or allows and how that might happen is a question that you want to make sure all of the legal T's are crossed and I's dotted. So if you do need to take that approach, Marcy, I would suggest getting the city or county attorney involved and having that discussion with them in the room.
All right, Robert Edwards asks, if a local jurisdiction is already collecting from STVRs, how will that jurisdiction see an increase? Does the $5 fee to the state come back to the LG?
Good question. That kind of, Robert, goes back to the earlier discussion we had about the different mechanisms in those 24 or so communities that are already collecting the short-term rental local excise tax. There's not going to be an increase, or if there is, it's going to be very, very minimal. Kind of catching those folks that weren't necessarily registered or paying that are doing it through the platform. So any increases that those 24 or so cities and counties already collecting the excise tax on those, they're going to be minimal, if not none. The $5 fee, however, is going to be kind of a newfound collection on the state transportation side. That money, of course, like I said from the beginning, going to the Department of Revenue and then getting invested in transportation infrastructure at the state level. So if your jurisdiction, the cities of Savannah and Tybee Island and Chatham County, I think are notable examples that probably everyone's aware of, there's not going to be much, if any, increase in the local excise tax for those communities because they're already collecting that. What's going to change there is they are no longer going to collect that from the property owners. They're going to be collecting that through a payment from the platform when it's collected on the website booking page.
Great. I know we're coming up close on the 4 o'clock hour, but we only have a couple of more submitted questions as of the last few minutes, so I'm going to go through those. From Karen Bennett, is there any exemption in collecting occupational tax for short-term rentals?
You're going to hate me for saying it, Karen, but you'll want to consult with your city or county attorney. That's going to be a local ordinance question and not one where DCA or a state agency would be able to provide that legal counsel or legal guidance. So check with the city or county attorney wherever you happen to be.
All right, and what looks like might be the last question. And just so everyone knows, this chat will be saved and Tyler will have access to all of these questions. If you submitted a jurisdiction specific question, I replied to you privately in the chat and I will get those to Tyler and he will contact you directly. If you have any further questions outside of our time today, Tyler will also get with you based on the chat. So you feel free to continue to drop them there. All right, our last question is from Marcy Williams. TCT/TPD revenues must be spent in the same fiscal year received, the county's fiscal year or the DMO's fiscal year if different.
Good question. And that would be the city or county government's fiscal year. Since the city or county is the taxing authority, it is their fiscal year which drives that proverbial boat.
All right, great. It looks like we had one last question squeeze in. Cheryl Weinman. If our local tax is 3%, we are not required to restrict funds, correct?
Email me one-on-one because the answer to that, as every good government bureaucrat provides, is it depends. There could be a situation we would need to look at your authorization paragraph and previous year spending. But if you reach out to me directly and Dana can provide me that contact information, then we can certainly do that.
All right, Tyler, that is all the questions that have come through.
Awesome. Well, thank you so much, everyone, for being here. I know there are a lot of questions and there will continue to be a lot of questions in the coming weeks and months. So please just be patient, maintain those open lines of communication between your local government finance officials, your elected leadership, your DMO, your chamber or CVB leadership, as well as your city attorney or county attorney, as the case may be. There are going to be a lot of moving pieces and patience is the best way to go. So this is going to be a big boon for a lot of people. I think we all as Georgians can be happy in the impact that this is going to have on us and our ability to promote tourism and what everybody on this call knows is a great place to live and work and play. So please just be patient, keep a smile on your face, and know that you've got a lot of resources and a lot of colleagues who are ready and willing to help you with whatever they can. So with that, if you have any questions, feel free to keep those going in the chat. Otherwise, everybody have a great rest of the day. Hope you have a great week as well. And everybody on the coast, get your umbrellas ready because it looks like the rains are coming.